Hey, it's Mike Cambrett with Flipner.com. Welcome back for another exciting VIP interview. But I'd like to start off today by thanking you, my loyal listeners and followers, for making this a great year. This is actually our 150th show of the year, which is a pretty special number for me, as I set a bold goal at the beginning of the year to do 150 shows in 2014. And I said that at a time where I'd actually never even done one show. Didn't really even know what to expect. So here we are, show 150 of the year. And in addition to allowing me to meet lots of great people, we have really laid the groundwork for lots of great things to come in 2015. So if you're on my mailing list, you'll be the very first to know about what's going on. We have some awesome things coming up really in the first quarter of the year. And if not, please visit flipnerd.com to get on the list. So today we are we're joined by Kevin Bupp, who's a serial entrepreneur. He's a real estate expert, as well as a fellow real estate podcaster. So Kevin is passionate about helping others, has a great story to share with us, and has a lot of knowledge. So we could talk about a lot of things today, but what we're going to talk about is investing for cash flow. Before we get started though, let's take a moment to recognize our featured sponsors. RealtyMogul.com is an online marketplace for real estate investing, connecting borrowers and capital from accredited and institutional investors. Get a rehab loan fast and close in as little as 10 days. Rates start as low as 9%. We'd also like to thank National Real Estate Insurance Group, the nation's leading provider of insurance to the residential real estate investor market. From individual properties to large-scale investors, National Real Estate Insurance Group is ready to serve you. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of Flipnerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Hey, Kevin, welcome to the show.
Hey, Mike, how's it going?
Good.
Thanks for having me.
Yeah.
Congratulations on your 150th episode.
Thank
That's a lot
you.
of hard work that you put in.
Yeah, it's been fun. And you know, what's always fun to me is interviewing other podcasters, because we get to share notes. It's like it's a fairly small world, right? So,
right.
Yeah, everybody always wants to know, well, how do you do this, or what do you do there? And so we had a little bit of that chat beforehand, but that's always fun.
Yep, absolutely. Yeah, it's a fun business to be in, both real estate and podcasting. So I'm excited to be here. I'm normally not on the other side of the table like I am today. So in fact, I think I've only been interviewed 2 or 3 times. So I'm pretty excited to be here with you.
Yeah, good. You know what's funny is I say this all the time. I think you're going to agree with me. Is that real estate, after you've been in real estate investing for a while, it can become a pretty lonely business if you don't have some sort of outlet to mastermind or do a podcast or some show like this, or teach other people what you know. I mean, it can become, you're pretty siloed off out there, right?
Absolutely.
Yeah.
In fact, that's why I enjoy having partners. A lot of people say I hate having a business partner, but I've always enjoyed having a business partner because it keeps it fun, keeps it exciting if you get along with that person. So but absolutely. Podcasting helps as well. It helps me reach out and get to network and meet a lot of people like yourself and other real estate investors, throughout the country. So it's a lot of fun. Yeah.
Well, hey, thanks for being here. So why don't you, for those that don't know you, why don't you tell us a little bit about yourself and your background and your trials and tribulations and kind of how you got to where you are?
Sure. Well, I started off in real estate back when I was 19 years old. I'm 35 today, going on 36 here in a few months. But I was really didn't have a direction in my life. I was going to community college. A lot of my friends had gone away to school, but I really didn't know what I wanted to do, and I didn't want to waste my parents' money. So I was just taking classes at community college and bartending part-time and just having fun, but not really, no direction in life whatsoever. And was lucky enough to be introduced to an older fella. He was actually an actual boyfriend of the girl I was dating's mother, and he introduced me to real estate. He invited me to a Ron LeGrand, of all people, if you're familiar with Ron LeGrand or not, but went to a Ron LeGrand boot camp when I was 19. And that was a 3-day boot camp in Philadelphia. Didn't really have any expectations, didn't know anything about real estate. I really didn't know anything. I hadn't even ever read a real estate investment book.
Yeah.
So, I was just going in like a complete virgin. And what happened in that 3-day class is, number one, I saw a lot of people that looked like they had a lot of money. That was the first thing, and that was kind of eye-opening to me. And the second thing I saw was a lot of people that didn't seem much smarter than what I was, making a lot of money. And it was intriguing to me. It was intriguing enough to where I was like, okay, well, you know what? He invited me here. This has been a great knowledge getter, and I'm going to see where I can take this path. And So I kind of presented to him, the individual that took me. He was already a real estate investor. He owned some multifamily and single family homes, and I kind of proposed to him that he should take me underneath his wing, and I could help him be his, I don't know, little admin person or do whatever, just be the busy bee that helps him get his work done during the day. But in exchange for that, he would teach me the business and teach me what he knew, and that's what I did. Basically, for like a year, I literally would go to school in the morning. 10 bar at night, but in between those times, I would go literally to his house or to his office in his house and just hang out with him. Go on calls with him. Go to realtors' offices. Go see properties. Go see his rehab projects, and just try to learn as much as I could. And at the age of 20, I bought my first property, flipped it, and did that a few different times. And I'm from Pennsylvania. That's where I was doing this at, and continued going to school, finished my degree, and decided that I really wanted to take this business to the next level. But I knew I didn't want to stay in Pennsylvania. I needed to get the heck out of there. Yeah. So I needed to go somewhere warm, and ended up in Florida. So moved down to Florida in 2002, and took about 6 months to really understand the lay of the land, what was what, where the opportunities were, and that was kind of right when the market started just really heating up, and just kind of rode the roller coaster like a lot of people did, and ended up buying, I ended up doing about 150 deals total. Most of them were buy and holds. I had about 122 single family homes in my portfolio, along with a bunch of other multifamily, working up until the crash happened, and the crash killed me. I mean, the crash literally ended up giving most of my properties back to the bank, minus the multifamily. The Florida real estate crash wasn't just a value crash. It was also a rental market crash. I was in areas where a lot of spec homes were being built. And these developers, when the market started going down, they realized they couldn't sell them, so they started renting brand new homes for basically what we were renting our 20-year-old homes for. Right. So the little bit of cash flow we had from these single-family homes, although we had a lot, it was gone. Yeah. It just wasn't there. So anyway, fast forward to today, I've kind of reinvented myself, decided that I wanted to basically focus solely on cash flow, truly cash flow positive income properties. And my niche as of 2.5 years ago until today has been mobile home parks. Okay. And that's what we're doing today is we're investing heavily as often as possible in mobile home parks.
Sure. Hey, thanks for sharing your story, Kevin. I mean, what advice would you give to people for, what's interesting to me, and really a lot of this came from me interviewing so many people and meeting new friends along the way, is that how powerful that knowledge is that you learn in bad and good markets and carry that forward, and kind of how you morph yourself into something that's leaner and meaner and more market resistant, more resistant to the ups and downs as you go along the way. I mean, what kind of advice would you share to people that are listening that maybe haven't been through those things?
I got caught up in the heat of the moment. I mean, there was a point in time where I realized that we shouldn't have been buying anymore. I mean, at a point in time, you realize that things are just artificial. They can't keep going the way they were going. Yeah. So just be conscious of what's happening around you, and just don't get caught up in the anxiety or the heat of the moment of, God, these guys are still doing deals, or they're still buying a ton of properties. And, just take a step back every once in a while and look at, step back and take a 10,000 foot view and really try to understand what's happening. Listen to a different economist, find out what's really going on outside of your bubble, because that's what happened to me. We got caught in I call it my Florida real estate bubble. What was happening here in Florida. I really need to step back and look. Okay, what are other people thinking about this market? I mean, how are other people viewing this market that we're in? And if I'd have done that, I probably could have got out fast enough, because when I realized that the market was starting to go down, I couldn't sell stuff fast enough. Yeah. But if I really would have taken a step back and not thought I knew everything or thought I was a genius, then I probably would have been able to salvage a little bit of what I had. Yeah. But anyway, so just slow down every once in a while and look around and speak to people that know a little bit more than you. Speak to other experts in the industry that are scattered across the country, and find out what their thoughts and perspectives are, is what I would suggest. Yeah, and I think what we're going to learn from you today is clearly you've evolved from being in a more speculative model that's all really focused on appreciation. It was in the Florida market, right? And now much more on cash flow, which is really what matters most, right? Well, the funny thing is that I wasn't really investing in a speculative manner, because I mean we were buying everything we were buying. We had a really strict model. We never pay more than 65 cents a dollar. And in my mind, I knew the boomer market was coming. I knew that a ton of people were retiring, and I knew that everyone wants to live in Florida. I mean, Florida, among a couple of other states. I mean, people don't move away from Florida typically. They move to Florida from the colder states. Right. So in my mind, Florida couldn't lose. Yeah. the population was continuing to grow here, and people were coming by the droves. And so I wasn't necessarily speculating because I thought we had enough of a buffer in how we bought.
Yeah.
And I mean, we were buying cash flow positive single family homes. But at the end of the day, the thing that was challenging for us with single family homes was the management infrastructure that it took to efficiently manage them properly. When you really start getting down to it, there wasn't a lot of real cash flow left over. It just wasn't. And so, either way, if I would have looked back, what I did learn is when the market did crash, and I look back at what happened to me and my business, the only thing that survived were my multifamily properties. And I just wondered to myself, why the heck didn't I get out of my comfort zone and start buying multifamily properties sooner?
Yeah.
Because you can diversify your risk amongst other, multiple different units rather than just one single family home. And, you get more efficiencies of scales and economies of scale when you have more, doors underneath one roof. And, and that's what we're doing today. That's kind of the premise of why we solely focus on multifamily type properties now.
Okay. So at the time, multifamily back then was it mobile homes back then, or was it?
No, actually apartments.
Buildings,
Yeah, we had a lot of we had a 10 unit, a 12 unit, a 28 unit.
Yeah.
Had a 42 unit. I think the largest we had, which is still small in terms of larger multifamily investors, it was a 72 or 76 unit townhome community that was in Florida here. But everything was in Florida. It was still in the Florida market. So those properties still took a hit. Don't get me wrong, because the rental rates, the rental market still crashed, but we were able to survive. The type of debt we had on them was still, it was still good enough debt to where we could still have a positive cash flow each and every month after debt service, and they still supported themselves, which I can't say the same for the single family homes.
Yeah. So talk a little bit about the rental crash. I mean, I know you said that builders started to rent and things because, so I'm in Texas here. We didn't see that. I mean, I think if anything, we saw rents go up because all of a sudden, really supply and demand, there were people moving out of homes they owned and into rental properties. And so the supply of availability went down and rent rates started to go up. And it's kind of stabilized over the past year or two, I'd say. But we're still seeing an increase in rent. So what was the dynamic there of why rents started to go down?
We were, there were the spec builders were building homes for people that weren't really here. They were building homes for flippers that were just flipping contracts left and right. I mean, it was brand new construction, but there weren't enough bodies here to fill those.
Yeah.
So when the bodies that truly did populate those communities, when they had the opportunity to either renew a lease on a property that we had that was 15 or 20 years old, or a brand new home that's all nice, shiny, brand new, for the same price or sometimes less. I mean, I saw some spec homes that were, 3-bedroom, 2-bath, 2-car garage homes that in today's market would probably rent for $1,500. I saw builders renting these things for $750 and $800.
Oh, wow.
About the same price as what we were renting older, smaller, no garage type homes for. And you can't compete at that point in time. It's impossible. And a lot of those builders went bankrupt anyway, but they were still they were still trying to hold on, just by a thin string. They were trying to hold on with, as much as they could to pay their debts. And sooner or later, the inevitable happened. They imploded as well. But with that strategy that they utilized, it completely crashed our rental market and the markets that we were in. So we were primarily basically from actually, we had some homes up in the Tampa Bay market, but a lot of the stuff we had was south of Tampa, about an hour south, and then all the way down to Fort Myers, which is on the west coast of Florida.
Okay, yeah.
Lots of retirement markets, lots of markets where, like I said, there weren't bodies there to fill in the brand new homes that were being built. So it was a challenge for us, to say the least. But hey, you live and you learn, right?
Yeah. So from a cash flow perspective, talk a little bit about why, before we get into mobile home stuff, about why the apartment buildings held up a little bit better. Like what are some of the reasons as to why? The management infrastructure to manage single family homes is very expensive to do it right, and especially when you've got homes that are scattered across multiple counties. So we could always have our apartments cost a lot less to run, and therefore we weren't as affected by our overall expenses with those units. So I wouldn't say they did great during the crash, but they survived. I mean, so don't think that we were making fat checks each and every month by those things, because there was a certain point where there was a couple of units that we were about to give back because there was a couple months where we had to write checks out of our own bank accounts to make up the negative debt service. So so they barely survived, to answer your question. Yeah. But for those that don't invest in multifamily now, maybe go through some of the details as to why they're easier to manage. I mean, there's some obvious ones that they're all under one roof, just with more scale. But to talk a little bit about some of the just general reasons why multifamily versus single family.
Yeah, well, that's it. You just mentioned one is you've got all the doors underneath. You know, most of the time one roof or multiple roof. 20, 30 units underneath one roof, and you might have a complex that's 300 units, so you've got more than one roof. But
right.
You've got buying power when you're buying supplies and when you're buying all the same stuff for one type of property. When you've got different types of homes, you got different types of supplies that are needed. Maintenance, you can have someone that is, if you've got a couple different apartment buildings that are close together, or let's just say you have one. I mean, you can have one maintenance guy making one trip to that property to do repairs, whereas if you have 30 single-family homes that are scattered across a couple different counties. Number one, the time that it takes for that maintenance person to get from house to house is very inefficient, and then the cost of gas and travel time, things of that nature. It's just the inefficiencies add up very quickly when you just simply talk about the maintenance aspect of it. So, that's a big part of it, actually, really. And the other thing that you get with multifamily, and this is just my personal experience, is so we had our own management infrastructure with our single family homes, and that was only because we never actually could find a good local management company that did as good of a job as what we thought we could do. And with apartment complexes, it's a little different. You end up dealing with a different caliber of property manager when you have a larger multifamily property. I mean, these are true professional management companies that this is all they do. This is their business. And you truly have the ability to buy an asset that can be professionally managed by a third-party company, and they're going to do probably a better job than what you're going to do running it. So whereas it's kind of a flip-flop when it comes to single-family homes. I always had a challenge, and I'm not saying that there's not good single-family property management companies out there, but I always had a challenge with finding ones that would aggressively market our property for rent, not nickel and dime us on repairs, and just, and that could run as efficiently as what we could ourselves. So, so what I'm getting at with that is you don't necessarily need as big of a management infrastructure in place to have multifamily properties if you're buying the right types of properties, the right size, in a market to where there's professional property managers available.
Okay. That's good. Thanks for sharing that. So, so Kevin, how did you kind of find your way into mobile home park investing?
Well, I mean, I kind of look back and 2011, I got out of real estate in 2008 when the market crashed. I mean, I literally got out of real estate. I still kept some of the properties that still made sense. I have some single family homes that were left over and a few of the multifamilies. We did sell off a few of the multifamilies after the fact. And, but I took like 3 years really just to reflect. I did start a few other businesses that were completely separate from real estate. And I wanted to see what was going to happen because I was stuck again in my Florida bubble. I was looking around me and seeing blood everywhere and just not knowing what was going to happen next. I thought the world was going to end, really. Because a lot of people were speaking that way, and it's tough when you're stuck inside that bubble. But anyway, so 2011, I realized I wanted to jump back in, and I saw a lot of guys doing really well, and I started looking at what worked for me and what didn't. Multifamily worked, single family really didn't, and I started looking at the immediate the apartment market in the local markets I wanted to invest in, or at least I thought I wanted to invest in, which were the markets surrounding me. And apartment market was very hot. There's a lot of institutional money here locally where I'm at, and they're compressing cap rates. And I wasn't finding great deals. I wasn't finding deals that had enough of a buffer zone that would make me feel comfortable buying them. And the prices were just continuing to go up, cap rates go down. So I was like, okay, well, number one, I need to start looking outside of my market that I was comfortable in, which was the Florida market. So I started looking in other major metros, and the same thing was happening. So I looked at mobile home parks. I'd always heard that they're cash cows, and so I started digging a little deeper, and I started realizing that there were some additional intriguing values that mobile home parks had that multifamily apartments didn't. And one is they've got a massive barrier to entry in that no new parks are being built in the U.S. They're only going away. So you don't have to necessarily buy something and worry about competitor opening up a new mobile home park down the road and undercutting you, or having more amenities or whatever it may be. That just doesn't happen. So, and the second thing is a lot of the owners of mobile home parks are still the original mom and pops that developed these things, 25, 30 years ago. And they're at the age now to where a lot of them are owned free and clear. A lot of them, their health is deteriorating. They need to get rid of them. And there's the opportunity for owner financing. It's pretty common to help them avoid their capital gains and, mitigate their exposure to the IRS. So those are just two.
They have more of an installment sale to use. They take over time.
Absolutely. So, and then there's also additional opportunity because you find those people that have owned it for such a long time. You'll find that they became friends with the people in the park. They haven't raised rents for a number of years, or they're just not managing it efficiently. They've got empty units there that need rehab. They're just sitting there vacant, that are just revenue waiting to happen.
Right.
And so just positive things that I didn't see happening in the apartment sector. So plus, as you and I both know, affordable housing is an ever-growing demand, and mobile home parks kind of fit a unique niche in that field. And that when you start looking at housing that is in the $500 a month price range, what you get in an apartment in most major markets is war zone, scary, drugs, violence. It's not a nice apartment building.
Right.
But so that person has the option to either live in a really rough apartment building that's scary and, do you really want to raise your kids around that? Or they have the ability to live in a mobile home that they've got their own, little parking pad. They can put Christmas lights out around it. Their kid has a little bit of a yard to play in. So it kind of fits a unique void in the affordable housing market and gives lower income families the ability, to have home ownership or to have something that they can truly call their own.
Sure.
So that's the exciting part that I like.
Yeah. So talk about kind of separate, mobile home investing, individual units per se, versus, kind of buying the park.
Okay. Well, buying the park, there's a couple different models of buying the park. There's models to where you just own the dirt, where you just rent lots back to the tenants who own the homes themselves. Then there's a hybrid of the two where you own the dirt, but you also own some of the units, whether you accumulated them because people died and, they end up keeping the trailer in the park because their heirs didn't want it or whatever it may be. And then you got other models to where you actually own all the units. So it's kind of like a rent. It almost is like an apartment building because you own all the rental units. And then, in comparison to that, you'd said, mobile home investing itself, there's a lot of guys out there that I know just buy the mobile homes and either have them on their own, parcel of land, or they actually rent a pad from a park owner like myself and collect a spread on what they can either, rent or sell that home for on a monthly installment basis.
Okay. So in terms of, so what do you guys do? Do you guys actually rent the properties, or are you just renting the pads?
No. We have, that's it. We have a mix of the two. We have a park that we just bought. It's a recent acquisition up in Atlanta, actually beginning this year, where we own the property and we own all the units. All the units came with it. It was a bank sale. It was a kind of unique situation. The previous owner, it was an old mobile home park, 7 years ago with old, rundown, crappy units in it. And that owner took a lot of new debt out and went and bought a whole bunch of newer used homes and brought them in and over leveraged himself, and then basically the property went into foreclosure. So that property came with a whole bunch of newer trailers, and now we're selling them back to the tenants on more of a rent to own type basis.
I see.
And so then we have other parks to where majority of the pads are actually we own the pads, and the tenant actually owns the trailers themselves, so they just pay us lot rental. So our only requirement is to keep up the infrastructure of the park, keep up the water, the sewer lines, the street, the lights, and things like that. But we don't maintain their trailers. It's up to them.
Right.
So they just pay us basically for the dirt rental.
Okay. And how does one go about if you wanted to invest in parks? Like you said, they're not building them anymore.
Yeah.
How do you find those deals?
There's a couple different ways. Obviously there's websites like LoopNet. I'm sure everyone's familiar with LoopNet, which is the largest commercial listing service. And then there's a niche store or a niche website called mobilehomeparkstore.com. That's probably the largest listing site for mobile home parks.
Okay.
But what you'll find is most of the stuff that's listed on there are overpriced. There's an issue with it, is why it actually came available to the public. Because most commercial transactions, whether it be mobile home parks or apartment buildings or shopping centers, they happen off market. No one ever even knows they come, for sale.
Right.
It's closed transactions. So We have found deals on LoopNet or Mobile Home Park Store, but they're few and far between. So what we do is we go directly to the owners. We have a guy, he's a partner of ours, and he builds a database on a daily basis for us. I mean, he literally spends 8 hours a day scanning the markets we want to be in, literally physically scanning on Google Earth Pro, and building a database of every mobile home park that's in that individual market. And then we do a background check. We track down cell phone numbers, home mailing addresses, things like that. And we cold call them. We cold call them every day, and we do follow up, direct mail campaigns, and we work with brokers as well. And that's how you find really good commercial deals, is either going direct or building relationships with brokers that have those relationships already with the property owners.
Sure.
That's how you find the best deals.
Okay. And for those listening that are interested in mobile home parks and things like that, I mean, why don't you talk a little bit about your kind of exit strategy? Is it just let me tell you my experience with rental properties. There was a point where I used to buy rental properties, and a big part of my thinking was I thought about kind of the eventual harvest, like where I want them to be. I wanted more of a B-class property. And then I started to see how well C-class properties cash flowed. But I was worried about the eventual harvest. Am I going to have to sell it at a discount to a guy like me when it's time to sell? And I was worried about that. And then I got to a point where I'm like, why would I ever sell this thing? It cash flows so well. I'm never going to sell it. And if I really wanted to, of course, now I could just sell it, finance it. But what's your strategy for exiting that eventually? Or maybe there is no exit plan.
Yeah, well, that's it. So it depends on how we own the properties. A couple of the properties that we own are just literally owned by myself and another partner. So we have no equity partners involved or anything like that. And a lot of the debt that's on them, if there is any, it's private debt, and it's good long-term amortization. I mean, it's good secured debt. So like the property I just mentioned in Atlanta, we'll probably keep that one. I mean, that thing is it's got new infrastructure. The units are pretty new. I mean, I'll keep that thing for a long time. It's in a great market. It's in the path of progress. It's a good market now. It's only getting better. So I can't foresee any reason why I would ever sell that. And the only reason I ever would is if I had an unsolicited offer that came to me that was just too good to be true, and I had another opportunity lined up that I could 1031 the money into.
Yeah.
That's about it. Other than that, I really would probably have no interest in selling that. A few other properties we own with equity partners. So it really depends on, and they're kind of properties that are in a turnaround transition phase. So it really depends on at what point in time we've maximized the value of the park, and then also at that point in time, what the capital markets look like. That really will determine whether or not we have to sell or that we can refinance and keep in the deal. So, because a lot of the debt that we have on it is short term, like 5 or 7 year type term commercial debt. And it really depends on what our investors want to do at that point in time, because our equity investors they don't have necessarily a say in what we do, but at a certain point they need to get their money back out of it. So in order for us to get their money back, we either need to sell or refi. And if we can't refi into some debt that makes sense in 5 or 7 years, then we'll sell. So that will determine what happens with some of our properties. But I mean, my personal goal is to build long-term cash flow for myself and my family. And so we buy properties both inside a fund, and we also buy them outside of a fund. And so the ones I buy outside of a fund are ones that I plan on portfolioing for myself to keep for the long term, and don't really have an interest in selling at any point in the near future that I can foresee.
Yeah. So Kevin, tell everybody about your podcast, the Real Estate Investing for Cash Flow podcast.
Okay. Yeah. No, well, I've been doing it now for going on a year, which is crazy.
Yeah.
We just released episode number 50, and I started the podcast because there weren't many other podcasts out there that brought on commercial experts that both owned and operated multifamily properties and commercial type of real estate properties. So I wanted to put that offering out there for people that whether they're already in commercial real estate investing or whether they're looking to make a transition, because a lot of guys are in a transitional phase where they'd love to do some multifamily or commercial property and they're currently buying single family, and it's kind of it's hard to track down educational information on commercial real estate investing. It's
Yeah.
just really difficult to do. I mean, there's just a ton of stuff out there for single family investing,
Right.
Fixing or flipping or wholesaling. But I noticed that there wasn't really anything out there for commercial investing. So I really wanted to bring some experts on the show that would share their story about how they got into the business, what they do that's unique to their business in terms of owning and operating their commercial properties. And so that's what we do. We bring on guests probably about 80% of the shows, and the other 20% are yours truly, talking about different topics that are important in the commercial real estate investing field. So
awesome.
Yeah, it's been a lot of fun. We release it once a week. It's every Monday, and it's been a blast.
And so if people want to learn, where do they go? If they want to learn more about you, I know you have a couple websites. Where do they go to learn more about you and the podcast?
The best way to learn about me is just going to kevinbupp.com. You can actually access the podcast from there. You can obviously find it on iTunes and Stitcher, but kevinbupp.com is the go-to site for everything that I'm involved in and everything, all the different opportunities that I'm currently working on. So
okay. Well,
just one-stop shop, nice and easy.
Great. We'll add links to your site and the podcast down below the video here. Well, so Kevin, before we kind of shut things down here, any as we're going into the new year here, any advice to people based on your experiences and how they should be thinking about moving forward with investing? I mean, one thing that we didn't really talk much about that is a little bit interesting is it feels like, and maybe not in Florida where you're at, but it feels like the market. It feels like we're back in about 2006 or 2007 right now, right?
It absolutely feels like that in Florida. In fact, I was having this conversation yesterday in fact, I have it probably at least once a week, and that's why I say just always take a step back and get that 10,000-foot view and get outside of your local bubble and find out what's happening in the other markets. And we actually don't buy much in Florida right now. In fact, I haven't even prospected in Florida for the past probably 6 months. And most of the properties we're looking at now are in North Carolina and the Triad region up there. And we've got a property that we're working on in Virginia right now. So markets that are a little bit more stable, that don't see the fluctuation that we see here in Florida markets or, other popular warm weather markets. Just get educated, find out what truly is happening, and obviously you've got to come to some kind of conclusion of whether or not what's happening is it real. I mean, are we at the top, we at the bottom, are we in another bubble? But get educated, speak to people that are smarter than you, and surround yourself with people that are smarter than you and that have been through this before. And that would be my words of wisdom for guys that are in the business now or that are just getting into the business.
Yeah. Thank you for sharing that. Yeah, it's been interesting to me. We've accumulated a rental portfolio, not a huge one, but a pretty good one, and it cash flows really well. And, I feel blessed going into this market because when I started in 2008, it was really not that long ago. We bought hundreds of houses, had, some great years for sure. But when things started to, I guess, after you've been through a cycle, if you're in a position where you have cash flow or you have multiple streams of revenue, you start to appreciate the fact that you can slow down a little bit. A lot of people that are wholesalers that and that's all they do, and they don't have rental properties or other sources of income, they can't stop buying ever because then they're dead. Yeah.
It's a job.
Yeah.
They created themselves a job. I mean, you can make a lot of money doing that, but I never understood that model either to where that's all you do because, and I know it's getting tougher now.
Right.
I know there's not as much inventory in the market and their marketing budgets are way higher now than what they used to be. So the margins are a lot thinner and that's just, I'm not interested in creating myself a job. I want something that, like the parks we have now, I literally haven't seen, it's been probably 2 months now since I've been to any of them. And I do talk to the managers on a regular basis, but we get money deposited in our account each and every week, and it's a beautiful thing.
Yeah,
so
absolutely.
That's what I like.
Awesome.
So,
well, Kevin, hey, thanks for joining us. I definitely appreciate your time.
Thanks for having me, Mike. It's been a lot of fun.
Absolutely. Take care, my friend. Please stay in touch.
You too. Take care. Bye-bye.
Bye-bye. Are you a member of FlipNerd.com, the most robust real estate investing platform in existence, where you can find off-market wholesale deals and great vendors literally in your market? You can get access to advice from experts and learn about local clubs and events right in your backyard. If not, please visit FlipNerd.com and register for a free account. You can register in less than a minute. It's pretty much the coolest site that's ever existed in the real estate investing industry, so get on over to FlipNerd.com.